It's time for best dividend stocks for August 2021. Hey, I'm Luke Downey. I'm co-founder of mapsignals.com. We don't follow the news. We follow the big money. And I am going to be talking about 5 dividend growth companies that are on my radar. I have known these companies for a number of years. I still continue to see promise with them. A lot of these companies have the characteristics that I want to see for a company that is, maintaining their dividend, growing their dividend year after year. And so as you guys are trying to build up your dividend portfolios or look for a stock that might fit your dividend characteristics, make sure to pay attention to high quality companies. Okay, don't be going after the biggest yields out there. Go after companies that are making a lot of money, because if they're making a lot of money and they continue to grow their revenues and their sales year after year, most likely they are going to be able to reward you with more dividends. They'll just continue to increase them year after year. So let's go ahead and get into this. And before we start, let's talk about the 3 characteristics that I look for when I'm looking for a great dividend stock. Number 1, I want to be looking at the fundamental characteristics of the company. I want to see growing sales, growing revenues year over year. Number 2, I want to see great technicals over the long term. And the only thing I really care about is the stock going up over time, right? The winners, they are going up and to the right. And then finally, the most important piece that I have learned is looking at the big money. We want to see stocks that continue to see big, smart investors piling into their shares. That lets us know that we are on the right track to greatness. So with that out of the way, let's go ahead and get into our number 1 dividend stock. And it is none other than Mastercard. Okay, now I'm going to show you a couple of charts as we get into it. This is the 1-year chart. Let's kind of get a flavor of what Mastercard has been doing this year. You see that there was a little bit of selling late last year, but as the world is starting to reopen and people are pricing that in, I believe people are going to be spending on their credit cards again. And that is what Mastercard does, right? You pull out your wallet and you start to spend money on your credit card. But again, I like to look longer term. So I like to look out till 2015. What is the trend of the chart since 2015? It is straight up, up and away. And a real way to summarize this chart would be juice. It is going up, up and away. And these blue signals, that is every time that this stock, Mastercard, has been a top 20 stock for mapsignals.com. That basically means this stock is a juggernaut. It means that it's got great fundamentals. It's got great technicals. The big money loves it. That is what we want to see. That is exactly the characteristics that we are looking for when we are looking for a great dividend stock. But let's go ahead and look under the hood, because that is where the magic happens. And so Mastercard is a financial stock, right? And their share price is just under $400. So it's not a cheap price. Great stocks don't have cheap prices. Market cap is just under $400 billion. That's crazy, because I remember when this thing went public, I believe it had about an $8 billion market cap. You can believe that. And that was like in the 2006 range, something like that. For 1 month, the stock is up 7%. We like that. That is strong. Year to date, it's up 10.6%. Those big money signals, that's that money going into the stock. We've seen 5 of those year to date. The last time they raised their dividend, it was up 10%. The 3-year dividend growth rate is about 45%. Holy moly, how you doing? And look, it's not a big yield. But again, I don't care about yield. I want to find companies that are able to grow their dividend year after year. And their 3-year earnings growth is 25%. That's amazing, right? Because why do you want earnings growth? Because if they can grow their earnings, they can also grow their dividend. And that is what we want to see. We want growing dividends. And that's what we're talking about. Let's go ahead and get into number 2. Number 2 is none other than Sherwin-Williams Company. Okay. You need some paint, you go to Sherwin-Williams, right? You look at this 1-year chart. Stock hasn't really been doing much, although it is in an uptrend. You see that there was some big money buying here. There was some selling. I remember there was the growth scare. You guys remember that? People got all scared. They sold their stocks back in like March. But then you see that stairway to heaven, a lot of green going back into the stock. But again, it doesn't matter what happens on a one-year basis. Let's go ahead and look since 2015. Stairway to heaven, you start to see the seeds of greatness. You see these blue signals. That tells us that this stock is a good stock, right? If it continues to show up on this report, it's hard to get on that report, okay? Sherwin-Williams is there, but let's go ahead, look under the hood, because you want to look under the hood. It's going to be a great stock or not. And let's see what we can find about Sherwin-Williams. Number one, they are a materials company. They do a lot of paints, coatings, things like that. You know, whether you are a business person or retail, you know, you can go into their stores and it's a lot of fun. Last time I went in there, you could see all the colors and, you know, I don't know. That stuff is really interesting to me. The share price is about $286. The market cap, $76 billion. So it's a decent sized mid cap company, maybe a large cap. For 1 month, it's up about 5%. Year to date, it's up 17%. The big money year to date, 5 signals. We like to see that. The last time they raised their dividend, it was a 23% increase. I will take that. The 3-year dividend growth rate is 16%. The forward yield is only 0.77%. But again, look at the chart, you know, this also has some growth component into it, right? So people are buying this thing not only for the dividend, but also the growth component. And then their 3-year earnings growth is right about 12%. So this thing is just doing great on fundamentals, great on technicals, and the big money is going into the stock. I like that. So that's the number 2 stock. Now we need to get into number 3 stock, which actually has a similar name. And that is none other than Williams-Sonoma. Who knows? Maybe, you know, Sherwin-Williams, Williams-Sonoma, maybe the Williams guy is related, or the girl. Who knows? Williams-Sonoma is like a really cool place. It's a retailer. You go in, it's got home goods. It's really high quality. I know that when I wanted to cook with my wife, I went and got some aprons. I still have them. I need to pull those things out. And they got, you know, the Williams-Sonoma logo and everything. She thought it was a hit. But again, let's get back to the stock. You see, there's a lot of juice that went into this stock, and basically, it's fallen a bit. You know, so people are, for whatever reason, selling the stock. But you know what? If you're looking for dividends, that's good because the yield actually goes up when the share price goes down. But again, let's go ahead and look out the past 5 years. Has this stock been a top 20 stock? And it has. A few times back in 2015, and then it made this rare list recently in 2021. So it hasn't been showing a ton on the top 20 report, but the fact that it just made it, it also had the last 2 quarters, they have had stellar earnings. I mean, just incredible earnings. I think this thing has somewhere to be. It's not down. I think it's got somewhere to be, and that's up. So let's go ahead and look under the hood. You know, look under the apron is what I should probably say. This is a discretionary name, right? So you've got extra money. You want to fix up the house. You want some nice stuff, some cooking stuff. You know, this is where you go. Discretionary name. Share price is $157. Market cap's a lot smaller than these other companies, just under $12 billion. For 1 month, the stock is down about 1%, but year to date, it's up 56%. So it's all about perspective, right? The big money signals year to date, and this is only talking about the green, that's 11 of these, right? Recently, there's been a little bit of selling. That might be some value here. So if you're a value hunter, this could be one to put on your radar. Again, their last dividend raise was 11%. Their 3-year dividend growth is 9%. You get a much bigger yield with this company. It's a forward yield of 1.5%. But look at the 3-year earnings growth, up 46%, right? If you're going to grow your earnings, you're going to make a lot of money. You could potentially pay your investors more dividends. And again, guys, that is what this is about. We want to hunt for the best dividend growth stocks out there. Let's go ahead and get to number 4. And this is none other than eBay. I mean, when's the last time you started talking about eBay? I know it's been a while. This is a great website. You go, you do your auctions and stuff like that. What I really like about eBay, and it's got not only just a ton of big money juice going into the shares, but you think about all the supply constraints that are going everywhere, right? People can't find all these products and stuff. Where can they potentially find them, right? It's going to be on eBay, right? People out there that want to sell these products, stuff that you can't find, hard to find stuff like right now while the world is basically trying to reopen and they got to start the machines again. eBay could be a good play. So year to date, this thing has been a big money all-star. But let's go ahead and look back to 2015, and you can see a lot of big money signals on our top 20 report. Again, that means this stock has great fundamentals, great technicals, and the big money loves it. And who doesn't like going on eBay and winning one of those auctions? But look, let's go ahead and look under the hood. Thinking about those old school days of eBay. eBay is now a staples company, right? It's basically, you can buy just about anything out there, right? The share price is $73. The market cap is right around 50 billion. Let's go ahead and put a B right there. I don't want anyone to get confused. The 1 month, it's up about 7%. So it's got a lot of momentum. Year to date, it's up 47%. Big money signals year to date, 10 of these bad boys. The last time they raised their dividend was 12.5%. Their 1 to 2 year dividend growth is right about 14% is what I calculated. They don't have a 3-year track record of paying a dividend, but I believe they will a year from now. I see no reason why they're not going to continue to pay and increase their dividend in the years to come. Their forward yield is right about 1%, but look at the 3-year earnings growth, just over 130%. I mean, a lot of people, they're talking about Amazon, this, all these other growth companies, but what about eBay, man? eBay is a great company. Keep it on your radar. It's certainly on my radar. Now, the final stock that we're going to be talking about is a name that I haven't thought about in a number of years, but it continues to show up in our data because there's some big money going into it, and it happens to be a dividend growth stock. So let's go ahead and get into that one. And it is none other than Oracle Corporation, ticker ORCL. And when I say it's had a lot of big money, I mean, look at this 1-year chart. I mean, that is just fantastic. I mean, that is what hopes and dreams are built around, charts like that. And Oracle's, this big enterprise software cloud, huge company, been around a long time. But look at this. You go back to 2015, really 2019 is when the stock started to appear on this top 20 list. And most recently, quite a few appearances. And that makes it really exciting. But again, you know what we got to do? We have to go and pop the hood, look under the hood, see if there's the seeds of greatness. And you are going to be shocked at what I'm finding for Oracle. Number one, it's a technology company. Share price is right around $87. The market cap is $242 billion. In 1 month, it's up 12%. Year to date, it's up 37%. Big money signals year to date, 16 of these green signals. The last time they raised their dividend was 33%. Their 3-year dividend growth rate is 11% growth. Their forward yield is really nice at 1.46%. And look at the 3-year earnings growth of just over 93%. I mean, these are fantastic companies. Again, these are just companies to showcase to you, to profile to you so that you can actually go in, do some investigation, see if you like these companies. Let us know if you like these companies. But always remember, this is for informational purposes only. We are not giving any personalized advice. We just want to show you guys the process of how we find some of the best dividend stocks out there. I'll see you next time.